The world's economy will grow 3.6% this year, expanding nearly 4% in 2015. But this time, emerging economies are not leading the way, says IMF World Economic Outlook chief Thomas Helbling.
For a long time, emerging markets were the stars of the global economy, seeing robust growth, offering better return prospects. I think what has changed now are that we are seeing better return prospects in advanced economies, better growth.
Anticipated higher interest rates, the result of reduced bond purchases by the U.S. Central Bank, are partly responsible for the capital flight from some emerging markets as investors seek higher yields and safer returns. Developing countries will continue to expand, but at a slower pace, says IMF chief economist Olivier Blanchard.
The main example is Brazil, which grew at 1% in 2012, which we think will go at about 3.5% in 2013. For the other countries, China, India, slightly higher than last year. So this is good. It's not the rates that we saw before the crisis, but these rates are long gone. These countries will have lower growth than they had.
In Europe, the prospects have improved for some of the higher debt countries, but the IMF says low inflation, which signals a lack of demand, remains a big concern. So is the health of Europe's banking system. More problematic is the situation in Russia and Ukraine. The IMF and member countries are in talks to provide emergency funds for Ukraine, but Blanchard says Russia's economy will slide further as economic sanctions imposed by the U.S. and Europe take hold.
I'm reluctant to give you a number, but surely, based on what has happened, growth in Russia will be lower than it would otherwise have been.
Despite a marked slowdown from the double-digit growth of the past, China is still among the fastest-growing countries, expanding about 7.5% this year. India and countries in sub-Saharan Africa are a close second, growing at about 5.4%. Arcega, VOA News, Washington.